Okay, so yesterday, wow, the entire market was just teetering on the edge, holding its breath for this one single event. It was a day of serious tension, with two massive forces pulling in totally opposite directions. So yep, let's dive right into it.
You heard that right. One single company's report pretty much single-handedly prevented a huge market-wide sell-off. What we saw was this incredible tug-of-war between crazy optimism in tech and this deep, nagging anxiety about the economy. It was a really fascinating day on Wall Street, and we're going to break it all down for you.
All right, section one. So who was the hero of the day, right? Well, in one corner, you had the absolute titan of the AI boom, Nvidia. They were stepping up to deliver their earnings report, and believe me, the stakes could not have been higher. There's all this talk about an AI bubble swirling around. So what does Nvidia's CEO Jensen Wong do? He sends a direct message to the market. He basically said, and I'm paraphrasing here, you guys are talking about a bubble? We're seeing something completely different. We're seeing real demand. That one statement, it was a super powerful signal that really helped calm a lot of nerves. But hey, talk is cheap, right? He didn't just use words, he backed it up with a staggering number. Nvidia's revenue forecast for the upcoming quarter is a massive $28 billion. This wasn't just good, it was an absolute blockbuster figure that just blew past everyone's expectations.
And this really puts it into perspective, just how strong that forecast was. I mean, analysts were already expecting a huge number, right? Around $26 billion. Nvidia comes in a full $2 billion higher. They didn't just meet expectations, they absolutely shattered them. And that just calmed so many fears and injected this huge dose of optimism right into the tech sector.
Okay, so that's the good news. Now for the other side of this battle. While Nvidia was doing everything it could to push the market up, you had another powerful force pulling it right back down. A whole lot of uncertainty coming straight from the US Federal Reserve. So was it all good news for the markets? Not even close. This was definitely not a one-sided story. Just as everyone was celebrating Nvidia's report, the minutes from the Fed's latest meeting dropped, and boy, did they reveal a much more confusing picture. So what was in these minutes? Well, they basically revealed a central bank that's kind of in disarray. The officials were totally split. They couldn't agree on what the bigger threat was. Was it stubborn inflation or a slowing job market? And on top of that, there was a lot of skepticism about whether we'd even need more rate cuts next year. For investors, a lack of a clear plan like this, it just signals one thing: uncertainty. And if there's one thing markets absolutely hate, it's uncertainty. All right, section 3. So you have these two massive forces clashing. How did this epic battle between tech optimism and Fed anxiety actually play out in the stock market? Well, let's take a look. Well, after some initial panic, things started to stabilize. But it was really in that final hour of trading where Nvidia's good news just took over. A super powerful tech-led rally pushed the major indices into the green, and get this, it broke a painful 4-day losing streak. So yeah, tech optimism won the day, but man, it was a close one. But this right here tells the real story of just how divided the market was. The rally was incredibly narrow. I mean, you had the Magnificent Seven, those mega-cap tech stocks, they soared. But the other 493 companies in the S&P 500, they were basically flat. This shows you how a tiny handful of giants were literally propping up the entire market, and it really highlights how fragile that optimism was. Okay, moving on to section 4. This whole conflict wasn't just contained to the stock market. Nope, the ripple effects were felt across all the major asset classes, and it created some really interesting moves. First up, the US dollar. It reacted to that hawkish tone from the Fed, and hawkish just means they're sounding more aggressive on interest rates, and it rallied sharply. That kind of macroeconomic anxiety, it almost always leads investors to run for the perceived safety of the dollar. Now, gold's behavior was weird. It actually managed a small gain even with a strong dollar, which is pretty unusual. But its price chart was all over the place, showing what traders were calling a pump and dump pattern. A super fast artificial price jump followed by a huge sell-off. It just tells you there was a ton of speculative action and nervousness in that market. And over in the crypto world, we saw a split decision that perfectly reflected the market's own division. Bitcoin ETFs, they finally broke a 5-day streak of money flowing out, bringing in a net $75 million. That's good news. But on the flip side, Ethereum ETFs just continued to bleed, marking their 7th straight day of investors pulling their money out. And finally, let's talk oil.
prices took a pretty sharp dive, and this was purely a reaction to those macroeconomic fears. It was a classic supply and demand story. News came out about rising inventories, which suggests weaker global demand, and boom, that pushes prices low.
So, after a day with so much intense conflict, where do we go from here? What are markets looking at now? Well, it turns out there's a huge piece of the puzzle that's still missing.
And what's that missing piece? The full October jobs report. We don't have it. Because of the recent government shutdown, the Bureau of Labor Statistics just couldn't collect all the data they needed. This is a massive blind spot for the Fed and, really, for any investor trying to figure out how healthy the economy actually is.
So here's the timeline on that. We got some incomplete data, sure, but the full official October report, that's now going to be bundled with the November report and released on December 16th. So what does that mean? It means the market has to fly partially blind for another few weeks. Not ideal.
And that brings us to the ultimate question that's hanging over everything, isn't it? Yesterday, Nvidia's incredible strength was just barely enough to outweigh the anxiety coming from the Fed. But was that just a one-time thing? Or can the sheer force of this AI boom continue to carry the market forward, even with so many economic unknowns out there? That really is the billion, or, maybe the trillion-dollar question. If you found this helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. We've got more news in our Telegram channel. Check the first comment for that. See you next time.